Hi, welcome to the Market Alert for Wednesday, the 14th of December 2016. So today is D-Day. It's Yellen Day. It's when we get to find out whether she's going to increase interest rates or not. So fingers crossed she does, because then we'll see a lot more excitement. And speaking of which, yesterday the market kept putting in new all-time highs. We had this one in the early part of the session, and then this one before the close. So we've got a new all-time high at 19,959, only 41 points away from the 20,000 psychological level. So the market managing to move up yesterday. We didn't get a signal, unfortunately. We didn't break through the psychological line to come back, but the market moving up there and then giving back the gains before the end of the session. At the moment you can see it's just resting on the 19,000 line there. I think it is 19,000, isn't it? Let me just double check this. It should be. It is 19,900. So again, it'll be some point today that we should see the 20,000 hit. I'll be very surprised if we don't. It'll be back to what scenario that I said yesterday, where they'll use it to be increasing interest rates to move the markets at the 20,000, and then it'll be good night Vienna. And there you can see the daily chart. It's just been relentless. Another up day. It's about 6 in a row, I think, something like that. 1, 2, 3, 4, 5. Today will be 6. This one just closing. Oh no, that was up as well. So 1, 2, 3, 4, 5, 6, 7. This will be the 8th day where the markets moved to the upside, heading for that psychological 20,000 level. This will be out at 7 p.m. It's a quarterly live meeting. The next one will be March. The other ones in between are just announcements. But this one, she will be in front of the press. And that's going to be 7 p.m. I'm just looking to see if the crude oil inventory is out at 3:30 as well, but the market's likely to trade sideways unless it can have a run on those figures to the 20,000 before the announcement. But we won't know that until the market opens at 2:30. Well, we'll get an idea, of course, but in the pre-market session, but we'll just have to see how that pans out as well. And again, something that I mentioned yesterday with regards to volatility, an article appeared yesterday. This is what happened the last time Yellen hiked into the quad witching. And quad witching, for those that you don't know, the derivatives markets, you've got index options, stocks options, futures options, and stock futures contracts that are created and used by the pros, and all of these expire on Friday. It used to be called triple witching, it's now quad witching, because they added in the stock futures contract probably, 10 years ago or more. But this does cause volatility as the positions are closed out, and also, with the fact that we've got the potential rate increase anyway, that this is when it kicked off last year, and we saw a 2,000 point move to the downside from Christmas. So, will it happen this year? Well, as it says at the bottom of the article, it's different this time though, and I think that's a tongue-in-cheek, sarcastic comment there, because it isn't different. It's worse than last year because we've got new all-time highs and they managed to bring the market back. So let's see what happens. And implied volatility, I'll just use this one today. I'm still modifying the colour scheme so it looks better than the ones that I put in yesterday, but 11.35 is same as yesterday. And you can see there, so probably best just to create some that look similar to the one that we see here. Make life a bit easier, won't it? So at least it's clear on the screen. I think it was that clear yesterday. So there we go. We are seeing as actually, just go back to this article. That's the reason I meant to show you this article. As I said on last week, Thursday, the implied volatility went up even though the market went up, and it should go in the opposite direction. And as we've seen here, it's not really gone through the 10% area, not all the way down like it did here in August. And this is happening also with the VIX as well. It says as the Fed and the quad witch looms and the Dow 20K is within reach, the relationship between US equity and volatility complex areas appears to be breaking down again. Just as we saw last week, the VIX and stocks are rising together. This is a warning bell because this shouldn't be happening. They should be opposite, working against each other. If the stock market rises, the volatility drops because there is less risk, or there appears to be less risk to the fund managers' portfolios. So again, an interesting bit of information there to confirm what I also spotted last week as well. So we've got this situation where they're moving together, and that's because the option sellers are getting quite nervous about what's going to happen should Yellen raise rates. Right, that's it for this morning's. I will report in during the day. Other than that, as ever, thanks for your support and also for watching. See you in the next one.